Welcome to our discussion on the US elections and their impact on financial markets. We will cover the current state of the US economy, potential actions by the Fed, and how political developments are shaping market expectations.
Absolutely. Let's dive into looking at the economy as elections approach and developments during a potential Democrat or Republican presidency.
It's been a year since the Fed last raised interest rates. Now, with the recent lower PCE price numbers and other signs of cooling inflation, plus a weaker labor market and expectations of a Fed cut in September, more cuts are expected by the end of 2024.
Indeed, the Chairman Powell has already emphasized the risk of inflation and employment is already balancing out. Despite that, the market expectations for a September cut is already known. The question now remains how many cuts there will be in 2024.
True that. Until the US elections, there will be important data on growth, employment, and inflation that could offer new insights. So even if markets expect a rate cut, the Fed may wait to review this data before making a decision. Let's shift now to the political arena. President Biden's announcement that he won't seek re-election added to the market uncertainty. With Vice President Kamala Harris stepping up as the Democratic nominee, how will this impact market volatility?
Biden's decision increases uncertainty. Harris's success, of course, will depend on several factors such as her debate performance, VP candidate selection, and the effectiveness of her campaign and the ability to energize supporters. This increased uncertainty can lead to investors quickly switching from one asset to the other and changing their exposure.
How is the election uncertainty affecting the US dollar and market indices?
Well, the US dollar may weaken as markets focus on the US economic data and the Fed policy instead of its safe haven status, with potential rate cuts, of course, adding pressure. US indices might see volatility, but fiscal spending policies under Harris or Trump could be very similar.
Tech sectors and broader US indices might still attract buyers as they benefit from tax cut expectations under potential Trump presidency. This might see some profit-taking conditions. In general, Democrats in the White House could bolster sectors such as healthcare, technology, and renewable energy, maintaining with this way their recent gains. Republicans will favor banking, industrials, and energy sectors, driven by fiscal policies favorable to these industries. Now, what about the Trump trade? How might they be affected by recent political developments?
Specific Trump trades such as higher defense and energy stocks or declining clean energy could face bigger risks of an unwind. There could also be temporary sense of relief in non-US markets, particularly those in China and Europe, amid the weakening of a threat of tariffs.
Finally, let's discuss the bond market and fiscal policies. What can investors expect?
Regardless of the election outcome, significant fiscal spending is expected to rise in bond yields. A Republican victory could mean more fiscal stimulus, while the Democrats might also keep spending high. Both of them can, of course, push yields higher either way.
The US presidential election brings significant market uncertainty. A Trump win favors some sectors, while a Democratic win boosts others. Traders should prepare for volatility, but focus on economic indicators as data will drive asset performance.
Indeed, the US economy's deacceleration, rise in unemployment, and stable inflation supports the Fed's cut. Potentially, this can boost the overall stock market. Staying informed and being adaptable is key as we approach election day. Thank you for joining us, and we hope our discussion will help you better understand the potential market impact of the upcoming US elections.